Hello, you are welcome to Kelly BTC Academy. Here is where we share knowledge on how to trade, and we also teach you how to trade. Also, what makes our teaching more unique is the fact that we use real market condition and movement to explain things out, so you won't get confused when you open your trading view to view the charts, because this is most of the problem that we do encounter. Because when we start learning with diagram and graph, and you open your trading view to start analyzing the markets, you start getting confused. Everything that we do here on this channel, we use the real market condition to explain every teaching that we do. Without wasting your time, what we will discuss in this video is about liquidity sweep. So I will share with you how to identify and how to trade liquidities. That is the purpose of this video. I'm splitting, as you can see, I split this video into I split it the approach, yes, the approach on how to trade liquidity. I split it into 5 tips. As you can see, I'm going to explain it step by steps for you guys to understand what I'm talking about here. All right, before we start, please, if you haven't supported us yet, please do well, but do well, please. It will really help us by clicking the subscribe button and give us a thumb up. Thank you so much. All right, now let's go into the class. We know what liquidity is, or if you don't know what liquidity is, I've given a definition here of what liquidity is. As you can see, what did I say is liquidity? Liquidity is actually levels where last buyers / sellers keep his or her stop loss. Just understand that liquidity is levels where last buyer and last seller keep his or her stop loss. You get? If you are going into the market now to trade, you understand, you want to trade a liquidity sweep or a liquidity concept, anything, you should understand that. First thing you should understand what liquidity is. That thing you are trading, understand what it means. So you understand that liquidity is actually levels where last buyers / sellers keep his or her stop loss. In this channel, I don't complicate tradings. I simplify things and I make it easier for even a beginner to understand. Now, how to trade it? Knowing the fact that you have now known that this is what liquidity means. You have now known the definition of liquidity. Now, how to trade it? How do you now trade it? How do you now apply it? That is why I said in my channel, in my video, I like using the real market condition to explain all these concepts and to apply it to you on the chart, because this is what you see when you open your chart. You get how to trade it. Number one thing you should do is to identify your BOS first. Identify BOS first for trend identification. The reason you are identifying your break of structure, that is, BOS is your break of structure. The reason you have to identify it first is so that you know where the market is going, the trend of the market, the trend or the direction of the market. Get? After identifying it, you now identify the liquidity. After you have identified the BOS, you identify the liquidity. Now, after you have identified the liquidity, you wait for the liquidity grab. Now, after the liquidity, you have waited for the liquidity grab. Now wait for reversal candlestick confirmation. After you have gotten your candlestick confirmation, that is when you are supposed to trade. Now in this chart, now I'm going to show you these steps. Now I'm going to show you practically. You get? So right now, first thing first, what is the liquidity now? Where last buyers, where last sellers kept his or her stop loss. If you watch this video to the end, there is where I'm writing secret X bonus, is because at the end of this video I'm going to share a secret with you guys. If you stay with me to the end of this video, I will share with you guys a secret. That is the last thing I will do with the people that will stay with me to the end of this video. So without wasting your time, how to now we have identify your break of structure first. That is the first thing you should do. First thing first, this, as you can see, market was breaking high at this level. Pull back, you break high at this level. From this level now, you can see here now, this was the last high it break. And where is your liquidity level now? Where last buyers, where last sellers kept his or her stop loss. For instance, somebody that sold from here to here now, from here to here now, there is stop loss here, there is stop loss here. So somebody that sold here, keep stop loss here. Somebody that buy here, keep stop loss here. Don't forget that. So somebody that buy here, keep stop loss here. Somebody that sold here, keep stop loss here. That is the concept. After you have identified, because everywhere where you will see your break of structure, where market break structure is break structure to create a high. You get? When market break this way, this is where we identify your break of structure. After you have identified your break of structure, identify the liquidity. Now, where is the liquidity? From here now, you can definitely see that this low now, don't worry, it's going to come up. this low now is where the last liquidity is. This low now is the last low that leads to this high, which break this structure. It gets this low now, which simply means this is where the last seller, this is where this liquidity is. You now identify the liquidity. That is step 2. You identify the liquidity. Now after you have identified the liquidity, what is the step 3? What is step 3 saying? Wait for the liquidity grab. This is now after identifying the liquidity. Now this now you are, the only thing you need to do now is to wait for the liquidity grab. After identifying the liquidity, wait for the liquidity grab to happen. Now you can see from this level where we, after market break the structure to the upside, it drop back down again to grab that last low. This is where the liquidity grab happen. And now after the liquidity grab has wait for the liquidity grab. Now after the liquidity grab has happened, wait for the number 4 step is to wait for reversal candlestick confirmation. Now you have gotten here now, because we have seen here now that this was the last low that market buy and break this structure. Because we have gotten your break of structure, this is where the liquidity is now, and there is liquidity here. You get, because this was the last sell. Sorry, this was where the last people that buy, this is where they are keeping their stop loss. If market is dropping back down here to take this low, that simply means it has taken these people's liquidity, it has taken their stop loss, it has taken them out of the market. Now after you have identified that liquidity grab, you get, after that liquidity grab, now that point where liquidity don't grab these people that that buy. Now the next thing is for you to wait for reversal candlestick confirmation. Now your reversal candlestick confirmation may be morning, you wait for, it can be morning star, can be bullish engulfing, depends on anything that will form. But as you can see from this level, you can see what formed there. The next buy, and a very strong buy. And this huge strong buy now is the confirmation. You get, is the reversal candlestick confirmation. Is the reversal start. Now this strong buy now should tell you that buyers have come in, because this is a very, you don't use your eyes, so no need confuse you again. Say this market don't dey go, say buyer don't finally come in. You don't say this market is, but this buy is strong. After this buy, now this is where you should know that buyers have now come in. Now after you have you have seen the candlestick, you have gotten the candlestick confirmation, you now go in. You now go in, you can now trade, and you target the next high where you now enter your trade. You take your trade from here. You can now wait for a little pullback before a hit up. You can see what happened there. Market hit TP, market hit that high. You get, I'm going to explain something again. After market hit this high, now what happened? As you can see, what happened again? The same thing happened. After market hit this high, remember, the people that sold from here, now, this is where is their stop loss? This is where their stop loss is. You see, say this thing keeps happening. It's just for you to pay attention, listen to what market is doing. This is where their stop loss is. Somebody that sold from here now to take this other liquidity, this market that dropped from here to take this liquidity to buy up again, it has finished buying up again now. It has reached, because the people that sold there, this is where they keep their stop loss. It has triggered their stop loss now. So it has taken them out, it has taken these sellers out, these people out, these people that sell and keep their stop loss. It has triggered their stop losses, it has taken them out. Now after that again, what happened? Market dropped back down to seek this other liquidity here, to seek this other low here. You see what happened? You can actually enter for your other short position here, because after getting a candlestick, because this was a candlestick confirmation, you can see this gap, market drop with a very huge gap. Then after again, it pull up again to fill in that gap before the final reversal. That is actually what happened. You can actually enter from here. This was where you can get your enter for your confirmation entry. You still target that same liquidity, the next liquidity level. You see, say that market, you don't enter two market, like you don't chop two very nice position using this liquidity sweep concept. You get, if you enjoy this video, you want to go to the chart, actually go to the chart and test run this thing, check these things out. Just identify your levels first, wait for the graph, wait for the candlestick confirmation, then you trade the reversal. It's very simple as that. So if you enjoyed this video, give this video a thumb up, and don't forget to subscribe. Stay tuned, because we are bringing the next video where we explain how to identify your valid high supply and demand zones. That's what we will teach on our next class. We love you guys. Please don't forget to subscribe. I love you guys. Stay tuned. I love you. Take care. See you in our next video.